All right, y'all. We are live, and it is an overcast day today. The rooster is crowing, and there's a lot of life coming back outside after this winter. The birds are chirping. Has that smell? You know that smell that smells like spring coming? I love that smell. All right, let's get into this, guys. I wanted to do an update, and there's a lot of stuff going on right now on the Bitcoin chart. A lot of uncertainty. Let me turn off Market Cipher A real quick. What I want to do in this video is I just want to do some TA, do some analysis, look at Market Cipher, take a look at some support and resistance lines, some other indications, and what we want to do is we want to come up with a plan as to how we are going to be trading this in the upcoming days. Now, here's the thing, guys. Right now, for the past few days, Bitcoin has pretty much been trading. This is the daily chart. We've been trading within this range, and this is a dangerous area for traders who are looking to enter, swing trades, right? This is wonderful for scalpers who are making small moves, but if you're not the type of trader that's making small moves, if you're looking to enter a long-term swing long or a long-term swing short, you will get sliced up in this area because as soon as you enter, it's not going to be very long until the price goes against you because we are trading in this very small range. Okay, so I just want to say that up front, especially if you're new and you're looking for a good entry today, yesterday, today, depending on how the market moves, it might be best to be very selective and very careful in your trades and only enter a position if you're able to monitor it and watch it. Yesterday, for example, I did enter a little position right here. I don't know if you can see this, but I will zoom in. I entered a little long right here, and I thought we were going to come up to this weekly resistance, but we didn't. We only came up to this 24-minute resistance before we rejected off of that, and this was a trade that I really had to monitor. I was in drawdown for a little bit. I entered because I got some confirmations, but this was not obviously the type of trade where I can enter and then go to sleep. So let me come into the chat real quick, make sure everything is good with the stream. Is everything good with the stream, guys? Is there lag? Let me see. It looks like there is some lag here, guys. Let me adjust the bit rate here, and let me see if we can continue on with this live stream. Some very important things that I want to discuss. Let us see. Okay, all is good. Awesome, awesome. Shout out to Elliot Shell, who says that I am his favorite professional powerlifting farmer. Guys, I just want to let you know I am actually not a professional powerlifter. That is not true. I am a recreational powerlifter. Okay, I love to squat, bench, and deadlift in the basement, and I do not do it professionally, but other people in my family do. All right, guys. Okay, let's get into it. So what I want to do is I want to look at the chart. I want to lay out some possible scenarios, and what we are going to do is we are going to come up with a plan on how to trade this, okay? When things are so choppy, the last thing we want to do is be swayed by emotion and little price movements and enter into trades when we don't have confirmation that we should be entering into a trade. It's very important that we only enter into a trade if we have a lot of confidence, and not only that, but our goal as traders is to find elevating factors that increase the probability of us winning a trade and stack those up. So we want to find, 2, 3, 4, 5 reasons why we should enter a trade. There's elevating factors, and then there are deprecating factors. And the deprecating factors are reasons why you should not enter into a trade. And my personal rule is, if I'm in a trade, if I'm currently in a trade, and I would not enter that trade at the moment, then I get out of the trade. Okay, so let's take a look at the chart. things are not looking the best for our bullish scenario, but this is when we zoom in. So when we're zoomed in on the 4-hour, I know this is kind of sloppy, guys, but just bear with me here. Basically, what's been happening is we have been trading along this daily support that was a support right here, and then it got flipped into resistance, and then it was support again, and now it is flipped into resistance again. And since Friday, we have really been watching these levels because we know that there is, I don't know how this says 1 hour right here, but this should not say 1 hour. This should be our daily / weekly support. So we have a daily / weekly support up here, and then we've been trading in between this weekly support here, this daily support here. And then we know if we are to lose this daily support, okay, our next daily level is down here at 51,700 thereabouts. And we were watching this since before the weekend because the old cup and handle that everybody has been keeping their eyes on since, back at, the middle of February, we were saying that it looks like we had our handle right here, and then we had our cup forming right here, and then we came back up to the neckline last Friday, and we were expecting, well, when I say we, I was expecting this thing to come down over the weekend and actually retest this key daily level at 51,500 thereabouts. And the reason I thought that is because, number one, weekends always tend to have low trading volume, right? They just don't have the volume that they need to pump us to all-time highs. So this was an anomaly right here. Okay, and another reason why I thought we were going to come down and retest this level here is because really we can look at this price action. This other daily level down here at 51.5, it was a very strong resistance that got flipped into support, and then it was resistance again from February 22nd all the way to February 25th, and then it was resistance again around the beginning of March. Then it was resistance again on March 8th. So we broke out of this very strong daily resistance level. And it made sense to me that after the breakout, we would come back down for a retest and then come back up. So it's still not out of the question for me, guys, that we will come down and retest this, because if we just look at the structure of this price action, right, we came down and we bounced off actually a Fibonacci level, and we'll get into that later, and then we came up and we rejected off this weekly level and formed a lower high, and it would not surprise me, guys, if we come back down and form a lower low and have some kind of retest before we continue in our uptrend. Now, I know a lot of people are very concerned about Market Cipher on the daily, and I'm going to get into that in a second. But just so you know, I am still extremely bullish on Bitcoin in the long term. Are we going to have bumps along the way? Absolutely. But I don't think that the scenario that's playing out right now is going to end in a bear market. I just do not think that. The fact that altcoins have been pumping during this period of consolidation for Bitcoin is a very good sign for me. Got the black coffee. And guys, I don't know if you have been reading the news about altcoins lately, but it turns out that the Jason Casper like button spikes to a new all-time high during this whole Bitcoin consolidation. While Bitcoin bulls aim to recapture 57K, the Jason Casper like button has spiked to a new all-time high. So guys, FOMO into the like button, because there is not going to be any pullback. There's not going to be any retracement. The like button is definitely going to the moon. In fact, if we take a look at the like button chart right here, we can see that clearly this is the opportunity to buy. We have this very small pullback right here. And if we turn on Market Cipher B, we can actually see that, this is as bottom as we're going to get, okay? So if you guys don't FOMO into the like button, you are going to be like the people who knew they should have invested in Bitcoin back in 2010 but didn't, and are now kicking themselves. So, yeah, pretty exciting. I didn't think that I would get into the news here, but I did. So, what do you know? What do you know? Okay, so This is my top-down analysis right here, guys. I know it's kind of sloppy, but let me break it down for you. I don't want to delete it and do it again. But the orange lines are our daily levels, okay? And then these goldish lines right here are our weekly levels. And weekly and daily levels are extremely significant because most of the price action revolves around these levels. When we're looking at these daily levels, look at all the price action that happens along this orange line. Look at all the price action that happens on these gold weekly levels. And these are areas of liquidity. And what that means is these are the areas where the most buying and selling was happening. And so price will tend to retrace back to these levels because the market knows if it wants to free up some of the asset, it needs to get back to these areas of liquidity before the market can continue in either an uptrend or a downtrend. And when you're drawing these support and resistance lines for yourself, you're going to want to start on the daily time frame. And you're going to just basically look, let me turn these off for a second. You're going to look for areas where price has found a sticking point historically. You're always going to start looking to the left of the chart. So I'm going to turn these back on, and you can see, for example, let's take this daily level right here. I'll turn it off again. This daily level right here, the reason I drew this level is because we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days where price was trading on this line. Okay? And this is our key daily level back here at 51,527. And then as you're drawing these support and resistance lines, you're just going to go down in the time frames. You'll start on the daily or the weekly, then go to the 4-hour, then maybe the 1-hour. And make sure to label them. Make sure to label what they are because, like I said, the higher the time frame, the more significant the support or resistance. So right now, what I am expecting, guys, and I have been expecting this, but if we continue to struggle to hold this area, okay, our next stop is down here. And we might stop at one of these 4-hour supports. You can see we actually wicked all the way down to this 4-hour support and got a bounce off of it. But if it's true that we are forming lower lows and lower highs, that's kind of what I'm expecting, and I actually think that would be a really good thing because it will allow the market to cool off and give us a lot of upward potential. Look at Market Cipher right now, Market Cipher B. We were forming this very blatant bearish divergence. And guys, a bearish divergence is when your oscillator, okay, and it doesn't have to be Market Cipher B. It could be a regular RSI. It could even be a MACD histogram. It's where your oscillator is coming down while simultaneously price is coming up. And that's a very bearish sign. It means even though the price is going up, the amount of money, the amount of volume that is in the asset is going down. And inevitably that will lead to a small or big correction. And honestly, it would be really nice, guys, if we could get this oscillator, this Market Cipher B oscillator, down to the point where we were actually forming a bottom where we're printing a big green dot here. Because I like to look at Market Cipher as throwing rocks off the top of a building onto a trampoline. If we throw a rock from up here and it comes all the way down here, then we can get a really nice bounce and continue upward. But contrarily, if we throw a rock off of a place like, right here, this red dot right here, and it only comes down to here, we're not going to get that significant of a bounce. And Market Cipher B was getting really, really hot prematurely in my mind and forming this bearish divergence. When we came out of this bottom, I really didn't like the way we came out of this bottom. I would like to see something more like this that happened back in the end of January and February, where we clearly hit a bottom, and then instead of Market Cipher B getting really hot really fast, it was progressively building up momentum. We had a really clean crossover from the money flow turning red to green, and as it was crossing over, we printed a really nice trigger wave right here. And again, guys, remember, we are looking at Market Cipher not as just a whole bunch of dots and waves, okay? We're not looking for dots, we're not looking for waves, we're not looking at any one specific thing. What we are doing is we are looking at Market Cipher as a whole structure, because It's like reading another language, guys. There's regular price action with candlesticks, and then Market Cipher B is actually translating this regular price action into another language, okay? And if we learn how to read this other language, it will really help us interpret what's happening in the market. And if we look at this thing as a whole, instead of just looking for a dot, because nobody looks at price action and just looks at one candle, right? They don't just wait for one candle and say, okay, I'm going to long or I'm going to short. No, they look at patterns. They look at what's happening over time on the macro. They look for patterns, and that's how they do their TA. And the same should be true with our Market Cipher. Let me come into the chat here, y'all. Okay, guys, we've got a lot of viewers here, so I just want to remind you about the news, guys, that the Jason Casper like button spikes to new all-time highs while Bitcoin bulls aim to recapture 57K. Again, guys, FOMO into the like button. I know I'm not a financial advisor, but it will probably be one of the best investments you could probably make to like this video. I mean, I'm on Cointelegraph, guys. This is no joke. Okay, this is one of the most prestigious cryptocurrency publications on the whole interweb. So anyway, guys, when we're looking at Market Cipher as an entity, right? When we see these lows where in general we stop printing red and green dots above the zero line and we start printing the majority of everything below the zero line, this is where we should start looking for our long entries. And look at what's happening right now, guys. We are clearly coming back down into this area, and we just printed a red and a green dot below the zero line. And what this means is Market Cipher as a structure, right, as an entire structure, is coming back down, and it's telling us don't start to look for a long yet. And I'm talking about swing trading here, guys, because I'm primarily a swing trader. I like to take those big moves, like these huge swing moves where I could be in a trade for 2 weeks. And of course, I monitor that trade. I take profits, I add back in, etc. But, you know, Market Cipher is coming back down. It could give us a really nice entry to enter a really nice swing long position. So don't look at this thing as just dots. Don't look at it as just waves. Look at it as an entity, and notice how if we draw on this thing, it tells us what is happening in the market before it actually happens, right? We can see right here, Market Cipher is starting to come down, right, below the zero line, right? It's starting to come down before we get this big dump, okay? Up here, again, before we get the big dump, we can see we had this bearish divergence, right, where price goes up, but Market Cipher is coming back down. It's telling us what's going to happen. Down here, at the end of January, Market Cipher was coming back up. Price was trading sideways. Notice this, guys. In general, price was in this range right here. People were FOMO selling every time we came down and came down to this 28,000 level. People were FOMO selling. Market Cipher's telling us, look, guys, even though the market is trading sideways, we're going back up, okay? And same right here, right? We hit this bottom, and then we started to gain upward momentum, and Market Cipher was telling us we were going to go back up. When we got this money flow crossover on the 4-hour, we entered long into Discord. We entered long at 52K, and I was in that long all the way up until 58K. I didn't exit until Market Cipher was telling me that we were having a bearish divergence, and in hindsight, I should have stayed in that trade until we hit that all-time high, but I just didn't see that happening because, you know, it doesn't always happen exactly the way you interpret. So, let us look at some patterns, guys. I want to look at some patterns on a different chart. This is the daily, all right? People are kind of freaking out a little bit on the daily because of this red dot. And if you guys have been around the channel for a long time, you know that we don't call these red dots. We call them red diddly doots. More specifically, we call them red diddly don'ts, because you don't ever enter into a long position when Market Cipher is giving you these diddly doots, okay? Firstly, I did notice something quite interesting, and I don't know exactly what it really means, but it does seem like we are forming some kind of triangular pattern here on Market Cipher be on the daily time frame. Okay, where I'm in general connecting the green diddly doots with the red diddly doots. And so I'm wondering if perhaps we are going to have some kind of breakout of this pattern, where we come down and get some kind of bounce off of this trend line and then break out. I don't know, just a thought, guys, just a thought, okay? That is just a thought. I'm just looking at these things and trying to find patterns and really just constantly refining the way I look at Market Cipher because, like I said, it's like learning another language and I want to be able to interpret that properly. So there's a few things that I see forming on the chart here. I'm going to go to the 4 hour, which by the way is giving us another red diddly doot below the zero line, so we can expect perhaps us to form a bottom below this negative 60, where we get a green anchor wave with a nice other green dot down here, like one of these dots. Okay, that would be quite nice. But look at these different possible patterns that are forming. First of all, if we go from all the way back here, right before our Elon Musk pump, our first Elon Musk pump, we can kind of draw this trend line. We can kind of draw that trend line, and then again, we can draw a trend line from, let's see here, from this point right here, all the way up to this point right here, and see that we're kind of in this channel, okay? We're kind of trading in this channel. And it's not uncommon when we're trading in a channel for us to trade, you know, obviously between the resistance and the support and the resistance and the support. But a lot of times in channels, you will find that you could draw a trend line through the middle of that channel like this, right? And, you know, look at how it happens where we will come up, we will bounce off the support, come up, hit this middle line, and then come back down to the support. And then the second time we come up, we will break above that middle line. And the same thing happens right here, right? We come down, we hit that support, we come up, we hit the middle line, and we come back down. Okay? So perhaps something like that is happening right here, because if we ignore what happened over the weekend, this strange anomaly that went against the bearish divergence right here, okay, then we can kind of say, look, we came up, we hit this resistance, and now we are coming back down to this support of the channel, and the next time we bounce off the support of this channel, we will then break out and continue on upwards. Okay, guys, these are just ideas because what I'm doing is I'm looking at the chart, I'm thinking about possible scenarios, and then that's how I come up with my trading plan, where I am going to enter. Specifically enter a swing long trade, because I love to enter those trades where I can stay in for like a week. So you guys see what's happening here. And let me get back into the chat, make sure everything is good here. Wow. Crypto Face in the house. Shout out to Crypto Face, man. Yeah, Crypto Face. Yeah, I have a confession to make, guys. I have a confession to make, okay? Yesterday during Crypto Face's live stream, that caught me so off guard, guys. That caught me so off guard. I had just woken up, and I was actually in the bathroom, and believe it or not, I was on the toilet taking a dump while we were talking about what we were talking about, okay? I tried to keep it on the down low, guys. I muted my Discord when I had to flush and all that, when I had to unroll the toilet paper. But in general, it went pretty well, given the circumstances, and I thought that was very ironic, extremely ironic, that I was live streaming on Crypto Face's channel, Keys to the Castle, while I was on the toilet. That is crazy, guys. Okay, keep it on the down low, y'all. I don't want people to know. I don't want too many people to know about that. So, you know, one more thing, guys. We have almost 800 people, man, in the video, and we only have 200 likes. So, guys, FOMO into the like button. I mean, I'm in the news, guys. I'm literally in the news, right? You see this, Cointelegraph.com. The Jason Casper like button spikes to new highs. You guys are going to miss out. Look at this guy. He's looking at the charts. He's looking at my like button go up. He's thinking, man, I should have liked the video at the beginning of the stream. I should have. And people get upset with me when I tell you to FOMO into the like button. But it's for your own good, y'all. You saw the charts. You saw the charts. You saw the like button chart. Look at this thing. Look at it is going parabolic. Okay, Market Cipher tells us it's time to enter. All right, y'all. So sorry for my lasciviousness in asking you guys to like the like button. And if you don't know what that word means, then I guess you clearly don't read your King James Bible. I'm using that word out of context, by the way. So this is just a thought, guys. And if we do come down and we test this this bottom trend line of the of this little channel here, that would pretty much line up exactly with this daily support that we are forming. That would line up perfectly with this daily support right here at 51,600 thereabouts. Am I saying we're going to come down there? I'm not saying it guaranteed, but honestly, since last week, I was kind of expecting and secretly hoping we could come down to this nice, juicy level, because this juicy level would give Market Cipher B a lot of juice, a lot of upward juice, right? We want the upward juice. We don't want to be entering long, especially if we're, like, here's the thing. We had just come out of a period of consolidation right here. And as soon as the money flow crossed over, like, man, Market Cipher B was just giving us a bearish divergence, and we didn't have that nice revving up, right? We didn't have that nice, clear, slow and steady wins the race, right, guys? It's like when you're making scrambled eggs. You want to scramble them and put a little milk, a little raw goat milk into the egg, scramble it up with a fork. You want to put it on the pan on low and let that kind of simmer and let the egg juices become absorbed into the particles in the molecule. If you just put the burner on high, guys, you're going to end up with burnt outside scrambled eggs, watery on the inside, okay? That's what happened right here, okay? So we want this thing to cool off. We want to turn the burner back to low, okay? So this is one of my thoughts, y'all. Maybe we'll come down and retest this. Now, let's pull out the Fibonacci. And guys, if you want to learn, right, if you want to learn all these things I'm talking about, I am doing a course, right? I'm doing a comprehensive trading course. Join the Discord, link in the description, where basically the goal of this course is to give you guys confidence and skill to enter trades without having to worry about what anyone else is doing. You don't have to worry about whether or not crypto faces long. You don't have to worry about what I'm saying. You don't have to worry about what any YouTuber is saying. If Carl from the Moon comes on with an emergency update and says, you need to enter a trade right now, okay? You won't FOMO. You won't FOMO because you will have your own strategy. You will, and by the way, I love Carl from the Moon. I follow him. I think he's awesome. He does really good TA, and he's great. I don't mean any disrespect by that, okay? I'm just saying, right? He puts these emergency videos out, and it makes you want to FOMO. But if you are calm and you have a strategy and you have the tools you need and you have learned how to create your own market strategy, you have learned how to read Market Cipher, at least the way I have learned to read it, right? Then you will be confident and you won't be FOMOing, you won't be flopping and groping. Join the Discord, and when you join the Discord, there is a channel in there called Trading Course Information. Check it out in there. You'll be able to see all the info. And yeah, it's great for people who are new to this, who don't want to get wrecked, So let's pull out our Fibonacci retracement tool here, guys, because I think we can also see some interesting things. There's two different ways that we can look at this, right? I would initially want to pull it from right here, because this is our last swing low, right? When we're pulling our Fibonacci, right, when we pull out our Fibonacci, okay, we just pull it out. Sometimes I pull out my Fibonacci in public, and people give me some very strange looks, okay? Very strange looks. I mean, I'm a strange-looking guy in the first place, okay? I'm covered in tattoos. I'm a large man, okay? I'm extremely large. So when I'm in the store and I pull out my Fibonacci, people look at me weird. I usually dress weird, too. I just like to be weird, all right? And so I'm pulling it out, and what I like to do is I like to look for the swing lows where, we can clearly see. A great way to know how to pull your fib is to change it to a line graph, okay? This will help you see where those swing lows actually are. And we're going to pull it from our swing low. We're going to click here. we're going to pull it to our swing high. And guys, when you're doing this, make sure that your fib is not on reverse, okay? If you double click this right here, it'll pull up the settings, and there is a setting right here to reverse your Fibonacci, which will not be giving you accurate retracement levels. It's actually just giving you Fibonacci extension levels. Again, we cover all this in the course, but I'm going to make sure it's not on reverse. And what we're doing here is, if anybody's unfamiliar with Fibonacci retracements, essentially it's using the Fibonacci numbers, percentages of a move, right? So if we come from the bottom here, the swing low, to the swing high, and then we start coming back down, the Fibonacci is telling us what percentage of that initial move up we're coming down. So right here, we would have come down 23.6%. Right here, we would have come down 38.2%, 50%, 61.8%. And all of these levels are very significant. In fact, just by pulling this Fibonacci, you can tell that we came down and had a nice bounce off the 38.2%, and we came up and hit exactly the 23.6%, and right now, again, we are on the 38.2%. Okay? Now, the most significant levels that we should look for in a retracement tend to be between the 38.2 and the 61.8%, and a little bit below the 61.8. This is the area that we are looking for to get a nice bounce, not a bounce, but for the retracement to finish and for us to continue on our uptrend. That's typically just the way Fibonacci numbers work, right? We're going to look for a reaction off one of these levels. These act as support and resistance levels that price tends to react at, and when it gets to one of those levels, we become interested in a trade. So keep your eyes on these levels, guys. If we break below this 0.382, we might come down to this 0.5, guys, and it might happen exactly on this trend line where we come down and just wick below the 0.5. We come down to our trend line in the channel, which just perfectly coincides with this daily, important daily level at 51,600 thereabouts, okay? If we come down to there, it would give Market Cipher some nice time to cool off. We probably will form a nice bottom, and that will prime us for entering into a swing long position where if we come back down and test this trend line again, I'm expecting us to come back up at least to this upper trend line, right? That's just what I'm expecting, because right now we're trading in a channel, and we know that channels just continue forever until all of a sudden they don't continue. So you can be 100% sure that the channel will continue on forever until it doesn't continue on anymore. Isn't that very reassuring? So this is kind of what I'm looking at, guys. And there's something else that I noticed here as I'm just contemplating the charts, drawing lines. I love to draw lines, okay? I like to line dance, okay? I definitely don't, never mind. Never mind, guys. I'm going to turn back on our candles. Let's turn back our candles. Should we turn on hike and she candles? No, let's not do that. I don't like red and green. Well, all right, I'll turn on hike and she in honor of Crypto Face, because he's a cool guy. But I need to put them on blue and purple, okay? It's so soothing to the soul when you look at a chart and you see blue and purple. Even my Bybit account uses blue and purple candles. It's just so soothing to the soul. Do you want, if you're in a losing trade, do you want to look down and see a whole bunch of red? No. That's going to raise your blood pressure. It'll probably send you to the ER. You don't want that. Contrarily, on the contrary, what you should be looking for are nice colors that are quite soothing to the central nervous system. The last thing you want to do is get overly emotional if you're in a losing trade. No, you want to be rational, confident. You want to ensure that you're making sound decisions based on the charts and not based on emotion, alright? So now I'm going a little bit Aussie on you, alright, mate? So I was looking at this, and I'm kind of seeing maybe possibly, guys, we're seeing something like this, right? Possibly. Just possible. It's possible. We can extend this trend line down like this, right? And if we just tweak this upper trend line just a smidgen, right? You could kind of see that we're forming something like this. And guys, I know that this could potentially be a bearish, usually an ascending pennant like this can be considered bearish, right? But, with Bitcoin, a lot of times bearish patterns will in fact turn into bullish patterns. They will break out to the upside. And is it possible? I'm just throwing out scenarios that we should watch here. Is it possible that we are doing something like this? Right? Forming this little bullish, well, I shouldn't say bull, but forming some kind of pennant shape. And then we can break out and eventually come up all the way up here. Is it possible? I don't think it's out of the realm of possibility. And also, guys, it's not necessarily wrong to draw multiple patterns on the charts, right? And just keep them all on the back burner, like just keep them all on the back burner. We can keep on our old channel that we had going on here. Where I'm having trouble forming it right now. Here we go. See, it's the Heiken and She candles, guys. They mess me up. All right, we can keep our channel, and we can have patterns within patterns, right? Patterns within patterns. So let's just keep our eyes on this and see what happens. But the most important thing, y'all, when we're looking at these patterns, and when we are looking at these shapes, and when we're looking at these Fibonacci, right, pulls, and when we're in the store and we're taking out our fib for all to see, okay, just posting it on the internet for 700 people to watch live, okay, we always want to make sure that we're finding confluence with Market Cipher and confluence with other things. So, look, guys, it's very important, at least from my perspective, that when we are trading and we're looking for good entries, we need to find confluence. So I'm going to go ahead and turn Market Cipher A. Well, in Spanish, it would be Market Cipher A. Okay. Since I know a little Espanol, y'all, I speak Spanish with a southern accent, but some of y'all know that I'm Cuban. I am Cuban, and so my whole family speaks Espanol. But I was raised gringo out here in the middle of the country. Alright? So what I like to do is when I'm looking to enter a trade, I want to find confluence. Before I decide that we have come to the bottom, the first thing I want to do is make sure Market Cipher is telling us we have come to a bottom. And what's the most reliable way to know that we have come to a bottom on Market Cipher? In my humble opinion, it is to look at the 4-hour. I find the 4-hour gives me the most accurate signals. Now, this is just me, guys. I mean, many people use Market Cipher in many different ways. Okay? But when we form some kind of thing like this, right, a double bottom on the 4-hour, I mean, to me, that is just a sign that we have come to a real bottom, and now we can start looking for it long. So if this dumpage continues, okay, of course, we have to keep our eyes, this might be the bottom. That's why we have to look at Market Cipher and see what it's telling us. But if this dumpage continues, right, and we form a nice, deep, juicy wave below the negative 60, start to, consider, this might be time to enter a long. And then what we're going to do, once we start to see Market Cipher telling us, okay, things are going to start moving in the other direction, then we look for other signs. That's where we pull our fib and say, oh, are we bouncing off a significant fib level at the same time that Market Cipher is telling us to go long? We look at our support and resistance levels. We say, oh, are we bouncing off a support level when Market Cipher is telling us to go long? Like, for example, y'all, look at this right here, right? When Market Cipher was printing this double bottom, okay, and then it was showing us that momentum was moving upwards, right? We got this nice tight trigger wave with the money flow curving over. We could have entered here, or we could have waited until the money flow literally curves over, and look, we're getting a bounce off a weekly support. Okay, we're getting a bounce off a weekly support. And not only are we getting a bounce off a weekly support, but if we pull our Fibonacci, let me find it right here under pitchforks. If we pull this fib from the swing low of this move all the way up to the swing high, right, what do we notice? Not only are we bouncing off of a weekly support, okay, but we are, if we look right here, okay, right where we get this tight trigger wave as the money flow crosses over, we are perfectly bouncing off of the 38.2% of the retracement, okay? We're looking for confluence. We're looking for key support and resistance. We're looking for Fibonacci. And if you want to take it to another level, y'all know how much I love moving averages. Turn on Market Cipher A, okay? And as soon as we get this tight trigger wave, and we bounce off the Fibonacci, and we come up and confirm a candle above this key weekly support that was resistance level, look what happens to our EMA. It goes from gray to white, right? If we're speaking Espanol, it goes from gris to blanco, all right? So we have all these signs telling us now is the time. There's signs. We're walking down the road. We see a sign, right? The sign says, I can't think. What do signs say on the road? I don't know. I don't know what signs say. But on Market Cipher, on our charts, we're getting the signs. We don't want to enter into a trade prematurely. We want to make sure we have all these things in our favor. If I'm going to enter into a swing long, I want to make sure that I got all these things in my favor, yo. Uh-oh. What kind of accent was that? What kind of accent was that? All right, let's get back into the chat, guys. All right. Super Googly, thanks for the shout, bro. I did my best with the crypto face live stream. Yeah, you know, it caught me off guard. I had just woken up, as I was saying before. I was in the bathroom on the toilet, and so very ironic our conversation. Yeah, guys. So again, wow, 900 people in here, and we only have 437 likes. Guys, come on, man. Have you read the news about the Jason Casper like button spiking to new highs while Bitcoin struggles to recapture 57,000? FOMO into that like button, guys. It is not coming back down. There is no retracement. I pulled the Fibonacci. We are heading to $500 million as far as the like button goes, so make sure to FOMO in. And let's see what else we have in the chat here. Okay, wow. I'm not used to so many people in the chat. This is crazy. I might need to put this thing on slow mode eventually, because usually I like to answer all these questions, but this is just so fast for me. Thank you everybody for being here. God bless all of you. Seriously. Yeah, so guys, left field brings up a good fake news. Guys, this is not fake news. This is legit. This is legit news. I'm telling you. Just because there's spell check under the word Ethereum doesn't mean somebody copy and pasted this from a word editor. Okay, you guys are looking too deep into this. Stim checks just hit today, right? My boy, my friend, my good friend, Creepy Joe. Creepy Joe in the chat. Shout out to you, bro. Shout out to you for giving everybody stimulus checks. Shout out to you, bro, for turning on those printing presses, man. I appreciate that. Super Googly, what's FOMC? Just tag my name. You don't have to send me another super chat, bro. But I appreciate the super chat. Yeah, so stim checks it today. I've been reading news, and we know that news is not really a reliable thing when it comes to markets. But the news says Americans plan to pour all their stimulus check money into Bitcoin. Now, if that's true, at least that rumor will probably be a good thing for Bitcoin. Are people actually going to pour that money into Bitcoin? I don't know. I hope they do, but the reality is, guys, a lot of people have been very hurt financially by these conditions that we find ourselves in from what's been happening. So I feel like a lot of people actually need to use this money for things that are not investments. But we shall see, and it's definitely exciting, the fact that, monopoly money is being given out to everybody, and the prospect that it may potentially go into Bitcoin. And also, keep an eye, guys, the 21 EMA on Market Cipher A. This is a very key indicator for me where, right now, when it's gray, this thing is acting as resistance. So this is another thing to keep in mind. Like, right now, as long as we're below this thing, Market Cipher is giving us downward momentum. Below the 21 EMA is gray. I believe we're probably going to retest that level. And I could totally be wrong. Oh, Federal Open Market Committee. Oh, yeah. You're right. Thank you, guys. Yeah, that's a good point. Chester Copperpot, thanks for the watermelons. Archlou wants to know what leverage I use in entering long and short positions. Archlou, okay, here's how I deal with leverage. If I'm entering a trade, like the trade I entered yesterday, where I basically just, if I zoom in right here, I entered a position because I got confirmation on the 4-hour. I got this green trigger wave on the 4-hour, and then when the 24-minute confirmed bullish, I entered a trade right here, okay? I entered a trade right here because I knew we had some upward momentum. I was in drawdown for a little bit, but we came up here. This trade, I used 3x leverage, okay? I might use 3 to 5x if I'm just expecting a little move up to like a resistance level. However, if I am entering into a swing long trade, guys, where I plan to hold this thing for a long time, I don't usually use leverage because I don't, first of all, the fees, right, that are always changing. And sometimes you can get really screwed with those fees. Sometimes not, but sometimes yes. And secondly, I like to have the playroom. I like to have the playroom where if I'm entering long, and let's just say, like, for example, if I do enter long, like let's just say, for example, I enter long right here, and then I fall into a coma, right? I fall into a coma right here, and I'm totally unconscious, right? Totally unconscious for months, perhaps weeks, right? And I'm entering long right here. Well, look, this trend can still continue upwards right here, even though right now, things are going down. I want to have wiggle room. I don't want my liquidation price to be so high that I don't have the wiggle room. Although that was a bad example because, if we're still up here, my liquidation price would be somewhere down here. But I like to have wiggle room, right? I'm so bullish on Bitcoin. I hodl Bitcoin. But I know those wicks. I know those wicks can kill you, man. Those wicks, those FOMO wicks, like that just happened. Zoom. I don't want to get wicked out. This is a very volatile market. And so I prefer less risk. And if you can do it, guys, use lower leverage. The lower leverage, in my opinion, the lower leverage you can use, the better. Obviously, if you have a much smaller trading account, leverage is an amazing tool so that you can start making more money sooner. However, it's a very dangerous thing, especially if you're new to trading. I have talked to so many people, so many folks. I call them folks, all right? Folks. I've talked to folks, all right? Folks. Who tell me, hey, Jason, I just got into trading, I just got into Bitcoin in January, and I've been leverage trading now for about 2 weeks. Already made like 15 grand. They're stoked, right? Man, this is awesome. Love your vids, they always say, right? And they always got a southern accent too, right? They sound like George W., all right? And then later they message me like the next day. They're like, oh man, I lost everything I made and more. And here's the thing, guys. If you're new to trading, I really recommend you don't have to take my course, okay? There's a lot of information available for free. There's a lot of courses out there. But I highly recommend you learn technical analysis before you start leverage trading. Somebody just messaged me earlier and said, I'm brand new, I'm ready to start trading, I have 30K as my capital. And I'm like, look, make sure you learn some TA. Don't just start using that 30K, that capital that you have, and start leverage trading when you don't know how to trade. That's foolishness. That's foolishness. Guys, the markets are always going to be here. Okay? If you're looking to get into trading as a secondary source of income, right? Or even looking to make it your primary source, you need to learn how to do this. You can't just be like, oh, bull market, got to leverage trade and make all my money. No. Slow down. Take a deep breath. and learn the skill, okay? This is a skill just like anything else in life. And if you rush into this, you're going to get wrecked. I promise you. And it always happens, inevitably. It happened to me. 99% of people, right? They start trading. Their first few trades, they do really, really well, and they gain all this confidence. They're like, man, this is so easy. I'm just going to keep doing this. And then they start to lose, and they're like, what happened on that trade? And then they enter another trade, and they lose. They're like, dang it. Then they end up on this huge losing streak. Their psychology gets in the way. Everything gets all messed up. They lose all their money, and then that's when they start learning TA. Guys, don't do it in that order. And if you are interested in a trading course, guys, I do offer a comprehensive trading course specifically centered around Market Cipher. It's meant for complete beginners that don't even know what a candlestick is. It'll give you everything you need to know. And we take all these things, we build upon it, and then we teach you how to create your own winning strategy step by step, how to backtest a strategy, how to make sure you can be confident in your strategy. That way you can enter a trade and not have to worry about what anyone else says or thinks. You have your own confidence. We're going to teach you risk management, psychology, all these things. If you're interested, join the Discord, y'all. I'm going to drop it into the chat right here. Join the Discord. And if you join this Discord, there is a channel in there called Trading Course Information. Check it out. It will give you more information on the course. Yeah, Adam Bolts, slow her down, slow her down. You know, if you're trying to be a professional brain surgeon, right? You would never say, man, I just got my scalpel in the mail yesterday, ready to cut some brains open. Come on over, Grandma, I'm going to cut your brain open, all right? No, you would have to go to medical school for 12 years at least, right? You're not just going to cut someone's brain open because you just got a scalpel. And not only that, you're using leverage, right? So your scalpel can go from like a 3-inch blade to like a 3-foot blade just by the push of a button, right? And you're operating on margin and using high leverage. You're going to get wrecked, right? If you try and do brain surgery with a 3-foot scalpel, you're going to chop someone's whole head off, all right? You don't want to chop someone's head off. No. Okay, let's see. Let's see if we have any questions in here. Shout out to Brad Elkins. Good morning. See if we have any questions. David Gray wants to know, do I trade altcoins? I do, but I trade them differently than Bitcoin. Here's how I trade altcoins. I trade altcoins where basically I'm more so of a long-term hodler and then selling them into Bitcoin on the pumps, on the pamps, okay? Like right now, I'm really into Cardano. You guys ever heard of Cardano? Okay? ADA? Y'all ever heard of that? Y'all ever heard of that? Man, look at the Cardano Bitcoin charts. Looking pretty pretty manipulation-y here, right? Okay, so Cardano. Man, this is not looking the best, guys. But here's the thing. Cardano, right? I've been holding Cardano for a while. And what I do is I wait for the breakout. So let me show you. I'll go to something like this, like a weekly chart. Let me turn off Market Cipher A here because it can get in the way of looking at these candlesticks. When I trade altcoins, I like to look for projects that I know historically have had very, very high prices and have come down and gotten beat down to a low, okay? So what I will do is I will draw a trend line at what I consider to be the low, okay? I'm just looking here, basic TA. Then I will just take from the top and draw a triangle like this, right? Triangle like this. And I say, okay, I know we're coming up to another bull cycle. My goal here is to accumulate bitcoins, right? Because I love bitcoins. It's tasty. You can make popped bitcoin if you just put the kernels in a pot with some oil. You can eat bitcoin on the cob, okay, creamed bitcoin. And so what I do is I look for altcoins that are forming this pattern, that are a good project, lots of hype, good team, forming this kind of descending triangle pattern. And then what I do is I just buy and hold when we're at these bottoms. And then when we break out, I will take profit at the previous resistance levels. So on the way up, these are the levels which I am looking to take profit out of my Cardano and put it back into Bitcoin. Okay, so right now we came up to this first take profit level, okay, at the end of February. I took some profit out. I always trade these things on like the weekly and daily, right? I'm long-terming this stuff. This is not like what I do for Bitcoin. And then my next take profit level will be up here when we retest this resistance. And then my next take profit level is going to be way up here. And if this bull run outperforms the previous bull run, now I know it's different because this is the Bitcoin chart, all right? I'm not going by US dollars. But, you know, Market Cipher still looking pretty nice, okay? Still looking pretty nice. If we come down from this wave and print a nice, another tight trigger down here, you know, depending on what Bitcoin does, how parabolic Bitcoin goes, you know, this is giving me the opportunity to get some nice, to accumulate my Bitcoins by accumulating Cardano. And that's my goal here. You guys know another one I like to look at is VidT, right? VIDTT, VIDT, BTC, pair, right? Same deal. I started accumulating back in like December when I realized, look, we have come back down to the low, right? In December, we went down to the low, and I said, okay, I can put my money in this coin, knowing that I can be confident that we're not going to go much lower, right? I can at least put my money in here and know that I'm not going to lose that much. But on the flip side of that, look at all the upward potential. Look at all the upward potential. This is a solid project. They're partnering with IBM. They have a really good real world use caseage. Use caseage? I don't know. Guys, I don't know English. I don't know how to read or write or nothing, right? I just trade Bitcoin all day and Bitcoin and I eat it, okay? So, look at all the upward potential. Oh, the only place we can go is up. This has been the low. This is just the low, right? This was the low from September 2019 all the way to June 2020, and then we came back down in in December 2021, and I'm waiting, man. I'm just holding on the sidelines. Look at the potential here. If we just retest the all-time high, guys, that's 870%. Okay, I don't have to have the stress about bearish divergence and charts and support and resistance. I'm just doing this on the larger term scale. And let's say that this time we surpass our all-time high, right? Let's say if we do something like this. We come up, we come down. We come up, we come down. If we do something like that, right? Very possible in this bull market, in this bull run. You know, that's almost 2,000%, guys. That's about 2,000%. So if you just, you know, put a couple grand in these coins, knowing, okay, I'm not going to lose much. At the worst case scenario, I might lose, a percentage of my money, but we're at the low, so I'm not going to lose much. But I have the potential to earn 2,000%. That's how I trade altcoins, y'all. And sometimes on Bybit, I will trade, Link USD sometimes, like for fun, but I have not been lately. I've been only trading Bitcoin and Ethereum on a day trading kind of, looking at the chart on a daily basis kind of way. It just fits my lifestyle. I know the way Bitcoin and Ethereum move. If I was able to do this full time, like if I didn't have a homestead, if I didn't have another business, if I didn't have a family, and I could just look at the charts all day, every day, and trade all these coin pairs, maybe I would do that, but that just doesn't fit my lifestyle. I find I have the most success when I take things slower. I trade Bitcoin and Ethereum on the 4-hour time frame primarily. I trade altcoins primarily on the weekly and the daily time frame. So there you go. Do I trade altcoins? All right. Let's see. Do we have any other questions up in here? Nick Sank wants to know, will I wait for a double bottom? Enter on the first green anchor? That's a great question. I'll get to that question, but John Wick says, what exchange do you buy on larger term scale? Won't Bybit eat you in fees? John Wick, that's a great question. I use Binance.com from the US with a VPN, and I also use KuCoin. Okay, I use KuCoin, and I don't use Bybit. Bybit really doesn't support many altcoins. Okay. Arthur Costa wants to know why 4 hours. Well, when it comes to Bitcoin and Ethereum, I find that the 4-hour time frame is large enough for us to tell what's happening. We can get a macro view of the market, especially when we're using Market Cipher, right? We can see the ebbs and the flows in the market, right? We can draw on it and kind of predict where the market is going to go, yet it's small enough to give us precision. It's small enough to give us precision, and I find that the signals are very accurate. They're very accurate, and this is Link USD, but for Bitcoin and Ethereum, the 4-hour signals are very accurate, okay? So I can be confident, even if things are going poorly, that if the 4-hour gives me some kind of wave down here, whether it be an anchor or a trigger, and then a lower time frame that I use in conjunction with the 4-hour, I speak about that a lot in my videos on how I select time frames, I can be confident that I will be able to get at least a little move off of these signals, right? If you're doing only the 1 hour, only the 2 hour, I find that does not accurate of a signal. But I prefer the 4-hour. Just for Bitcoin and me, we jive. We're jiving. We're jiving and arriving. And guys, if you are interested, I highly recommend you come to my channel. Come to my channel and give it a click. And come over here to playlists and check out the Market Cipher tutorials playlist, okay? This will kind of tell you my philosophy, and it will teach you a lot of stuff. You know, obviously it's not as much detail as the course at all. It's taken for granted that you already know TA. But, you know, if you go to this video right here, Market Cipher Trading Strategy, Win Every Trade, Step by Step, this will kind of give you my strategy, my algorithm that I typically use for trading Bitcoin and Ethereum. It'll give you the 5 confirmations I'm looking for when entering a trade. So check it out. Check it out, y'all, if you're interested. And guys, if you are interested in the course, right, this comprehensive trading course that goes over everything from A to Z, Market Cipher, how to create your own strategy, how to be confident trading these markets, join the Discord. In the Discord, there is a channel in there called Trading Course Information. Check it out. You'll get all the info you need to know how to join that course, okay? Ike Beats wants to know, what do I think about the trigger waves that might be forming on the 1, 2, 3, 4 hour charts for Bitcoin? The trigger waves for Bitcoin? Let's check out the 1 hour. Yeah, that does look nice on the 1 hour, guys. That does look nice on the 1 hour. Okay? And let's check out the 2 hour. Looking pretty nice on the 2 hour as well. Let's check out the 3 hour. Now, the reason I don't like this on the 3 hour is because, you know, money flow is curving down on the 3 hour. Money flow on the 3 hour, as you can see, is officially in the red. Okay, we can tell because down here, this bar is telling us whether or not money flow is in the green or the red that way, because it can be kind of hard to tell when exactly it crosses over. And I just think that because we are printing this on the 4 hour, I feel like it negates this on the 1 hour. And that's something that's very important, guys. When we're doing our analysis, and this is the way I do it, okay? I always go top down. I never go down. I never go bottom up, okay? I don't ever start with the lower time frames. I always start with the higher time frames. And the reason for that is because you could be getting the most bullish looking signal in the world on this 1 hour time frame, right? But look, we were getting a really bullish signal right here, and we just came down, okay? And so the higher time frames are going to identify the environment for you so that you know whether or not it's a good time to enter. Now, I would never enter a trade on the 1 hour based only on the 1 hour waves of Market Cipher. I would have to look for multiple things telling me to enter if I was going to enter on the 1 hour. Okay, something very significant on any time frame, I would say, is the money flow crossover. Okay, the money flow crossover. You can see that it's less significant on the 1 hour than it is on like the 4 hour because, when the money flow crosses over on, this is why I don't really like to trade the 1 hour as much. When the money flow crosses over on the 1 hour, we trade sideways and then we have a downward move before we have another upward move. If we're looking on the 4 hour, you can very clearly see that every time money flow crosses from purple into blue, that is the perfect long entry. Okay, the 4 hour just gives us a much better interpretation of the data because there's more data to interpret. Simple as that. And so I wait until the 4 hour is giving me signals, and sometimes I'll move into the 3 hour and the 2 hour to try and predict what the 4 hour is going to do, right? Because we're zooming in. If I see the 4 hour is about to print a nice anchor wave, then I'll go to the 3 hour. Say, okay, is that happening on the lower time frame? Is it happening on the 2 hour? But I will never start on the 1 hour and then say, oh, it looks good. Let's see what the 2 hour says. Let's see what the 3 hour says. I just don't trade that way. I have found that I end up losing trades doing it that way. And I'm not just talking about using Market Cipher. I'm talking about just trading in general. The bigger the time frame, the more reliable the signals. Archlou wants to know, do I short? I do. I will short on a very small time frame, small moves. But in general, I prefer to go with the trend. And right now, we can clearly see, if we zoom out of Bitcoin, that we have been in an uptrend for a very long time, right? At least since October. So yeah, when you say it's looking nice for the 4 hour, what are you looking for to say it looks nice when you scan over Market Cipher? Finn Beck wants to know. Shout out to Finn Beck. Yo, what up, Finn Beck? Filippo, am I still long in ETH? Yes, I'm still long in ETH. I entered long, and I'm just holding the long. I'm holding it, okay? Do not try that at home. But I've been long in ETH since we printed this this bottom right here. So I entered ETH long right here, okay? And I've been long. Obviously, I'm still in profit, but I'm just holding it, and my take profit level is 25,000. Right up here. This is my take profit. Still long in ETH. Okay, so when I say it's looking nice on the 4 hour, and I know I've gone over this, but I think it's really important, especially if people are trying to figure this whole Market Cipher thing out. If we pull up Market Cipher on the Quattro hour, the 4 hour, right, we can see that it is giving us a general, like I used the analogy before. If we look at regular price action as one language, and we look at Market Cipher B as another language. Market Cipher is translating the candlestick price action into another language, and it's our job to learn how to read and translate that other language. And if we just draw on Market Cipher, we can see that it pretty much outlines the general flow of the market. In general, right? In general, we can say that if we are not printing anything below the zero line, right? Of course, there's going to be some outliers, but in general, if we are not printing anything below the zero line, we are in a very strong uptrend. Once we start printing things below the zero line, this is a signal that things are coming down. And when things come down, we stop printing above the zero line. In general, look, down here, when things were moving downwards and consolidating, we were printing a lot of green and red waves below the zero line. And when things are moving up, we're printing a lot of green and red waves above the zero line. And then when we come back into an uptrend, right here, such a strong uptrend, we're not printing anything below the zero line on the 4 hour. And then we came back down here, and in general, we were printing the majority of the green and red wave crosses below the zero line. And so when I say Market Cipher looks nice, I'm saying we can look at this thing and see what direction the market is heading in before it heads in that direction. We're not just looking for a wave. We're not just looking for a dot. We're not looking at how deep the wave went or how shallow or how close to this or that. Those things are layers that we add on top of the foundation. The foundation is what direction is the market moving in, right? And if we just draw Market Cipher and outline the majority of the waves, the majority of the wave crossovers, we get this structure. And this structure shows us what's going to happen before it happens. Look at what's happening here. We see a curve down, okay? We see a curve down from here to around here. We see some serious downward curvature, right? And look, we see the downward curvature before the price actually drops. Okay, we see our downward curve from here to here. This is a very clear curve. Price doesn't drop until here. Okay, so Market Cipher is telling us what's going to happen. It's showing us that even though price is going up, momentum is coming down, money is coming out of the asset, and that it's becoming overvalued in a way, right? Because people are paying more for it than what's actually being put into it. And contrarily, down here on the bottom, right, we see Market Cipher curving up, right, from here. Sorry, I put a horizontal line instead of a vertical line. From right here to, we could even say right here, okay, the market is just trading sideways and consolidating. Yet, Market Cipher is telling us, no guys, we're going up. We're going up. That's what I mean by it's looking nice. So when I see that we're coming back down and we're going to come down and print a bottom, right? When we're printing bottoms, that's when I'm starting to look for a long. Because I'm like, okay, we've bottomed out. Now we can expect things to either keep going down or trade sideways, consolidate for a while. And when I see the momentum moving back up, that's when I look to get in a nice long position. And this works on every time frame, right? Obviously, it's more accurate on the higher time frames. But, it can work on the 5-minute as well. It can work on the 1 minute. It can work on the 30-second. Work on the 1 second, right? Sometimes I trade the 1 second, 100x leverage, no stop loss, 100% of my account on the 1 second time frame. And yeah, that's how I get wrecked. That's how I get wrecked. That's how I lose everything. That's how I lost my house. That's how I lost my car. That's why my family doesn't talk to me anymore. Yeah, but sometimes you got to do what you got to do, right? So I hope that makes sense. And again, guys, none of this is financial advice. Speaking of losing everything, if you take what I'm saying as financial advice, you will definitely lose all your Bitcoin, you will lose all your dollars, your euros, your pounds, your friends will stop talking to you, your family will reject you, you'll stub your toe on the dresser in the middle of the night when you're getting up to get a drink of water, okay? You don't want that to happen. You just don't want that to happen. You're going to rip your pants at work. You're going to bend over to pick up. You're going to spill your coffee at work on the floor. You're going to bend over to clean it up. Your pants are going to rip. Everyone's going to see your underwear, and they're going to laugh at you. Okay? This is not financial advice. This is not financial advice. Yeah, and guys, okay, just to clarify, the 1 second time frame scalping, that was pure sarcasm. That was not true. So make sure, do not do that at home, kids and adults and everybody else, animals who's watching. And also, guys, wow, 1,000 people. This is a record. 1,000 people. Man, CryptoFace pumped my channel. That is nuts. So, guys, if you're watching the video and you have not yet hit the like button, I just want to remind you that on Cointelegraph.com an article was published, that the Jason Casper like button spikes to new highs while Bitcoin bulls aim to recapture 57K. Basically, guys, the like button is going parabolic. This is your only chance to FOMO into the like button. And if you don't FOMO in now, you're going to regret it. You are going to regret it. I mean, I'm blowing up, guys. I'm in the news, Let's take a look here. Back into the chat. Oh, Dylan is freeballing, so he doesn't have to worry about people laughing at his underwear. If his pants rip, people are going to see more than what they were expecting. People are going to see more than what they are expecting. Okay. Yep, the like button's forming a cup and handle, guys. You gotta go long. Gotta go long. Okay, any more questions, y'all? I know there's a lot that I didn't answer. It's because I'm not used to, FOMO and subscribe, y'all. I'm not used to having so many people in the chat, guys. Like, I'm used to, 100 people. Now I have 1,000. So, I'm going to have to do something different here. But, let's see. Hey, Jason, new subscriber here. Thanks for subscribing. How does a green dot work on the 4-hour chart? Does it appear like in 2/3 of an hour only after closure of a candle? Okay, so the way a green dot works is it will form when the waves cross. Okay, so when these two blue waves cross, let me zoom in on the waves here. Okay, see, they cross right here. That's when the green dot forms. When this light bluish gray wave crosses behind the dark blue wave, that's when the waves cross. And it will form when it's crossing. Now, this can happen at any point during that 4-hour candle, okay, at any point. So it could be like 5 minutes into the 4 candle. When the wave crosses, it will start to print this green dot, okay? It's not considered confirmed until that 4-hour candle closes and the green dot stays forever, because the green dot can reprint, meaning it will show up and then go away and then show up and go away, depending on the price action, right? These waves can cross and uncross until that candle closes. So depending on your risk tolerance, depending on your experience, a lot of times I will enter into a trade while this thing is printing, not necessarily confirmed, if I'm getting confluence with lower time frames and support and resistance and all that stuff. All right. All right. So just to recap, guys, on everything that I was saying here during this entire stream, because in the beginning, if you guys are interested in some real TA and not just silly, sarcastic stories and questions and answers, rewatch the stream, because in the beginning I literally break down the markets, and basically here's what we are looking at, guys. We have been trading within a range here, really a range where we have been. This weekly resistance has generally been our resistance, and then this 4-hour support has been our support. And if we reject off of this daily level right here, this orange level, right? We're struggling to regain this orange daily as support, right? We've been struggling for 12 hours, struggling. Then I do believe we are going to probably come down and test this last daily level at the 51,700 thereabouts level. And there's many reasons why I think that. The first reason is because we have been tracking this cup and handle pattern since, for a long time now. And on Friday, we were expecting something like this. We have our handle, we have our cup, okay? And then we came up to the neckline, and we were expecting a retest of this daily level before breaking out of the cup and handle. The reason is because this daily level, not only would it give us a nice symmetrical cup and handle, but this daily level was resistance. It was support. It was resistance and then support and then resistance again, resistance again, resistance again. And we can look at this whole thing as a breakout of this key daily level, right? We broke out of this resistance after 4 tests, okay? And usually after you take the test 4 times, you're going to pass, right? For me, sometimes more, right? In high school, yeah, that algebra test, I still never passed it, right? But that's okay. So I was expecting us, when we came up to this neckline, to retest this level here, okay? To retest this level right here. Another reason I was thinking that is because we were getting on Market Cipher B, before we had this weekend anomaly, right? This weekend anomaly. It's very interesting. If we just cancel out what happened over the weekend, we were still at the neckline of this cup and handle and coming down to retest this level right here, right? Market Cipher B was printing that bearish divergence on the 4-hour. If I load up Market Cipher B, we were getting a very clear bearish divergence where Market Cipher was down ticking, price was up ticking, right? Expecting it to come down. And then there's a lot more confluence. There's a lot more confluence as well. If we pull out our Fibonacci, and people know how much I love to pull out my Fibonacci, okay, just pull it out. And we look from the bottom of the swing low to the top, and we just see where we're going to retrace to, right? It's just so interesting to see that if we retrace down right around to the point, to the 50% level, or even the 618 level, right in between 0.5 618, this key Fibonacci zone, that would give us, this is also that daily level. That daily level falls right in this awesome Fibonacci zone, right? Of course, I'm not drawing exact lines, I'm drawing zones. And, so it would make sense to me if we come down to this Fibonacci level, this key daily support, Market Cipher cools down and prints a nice bottom under that negative 60 line, and we get a nice bottom there, it makes sense to me that we have a lot of momentum to move forward and eventually break above that all-time, well, break above this level right here and just continue on upwards, right? That's what I'm looking for. And there's even more confluence than that. We have the Fibonacci, we have the daily support levels that we've mapped out, and also, guys, we have the trend lines, right? We have the channel that we've been trading in for a long time, right? If we take this trend line right here and just kind of go like this, right? Go like that, and then we take another trend line like this and we just go like that, you know, we can see that we are trading in this channel. And I was saying earlier in the video, right, that we kind of have been doing this thing in this channel where we come from the resistance and then we get a reaction off this middle line, then we come down to the support, right? Then we come up to the middle line and come down to the support. We come up, we get a little reaction on the middle line, come up, come back down, reaction on the middle line, come down to the support, right? Come up, get a reaction off the middle line, down to the support. We came up, got a little reaction off the line, down to support, right? So we're seeing that often within this channel, we're trading within this smaller channel. And so if we come down and we touch this support line right here, right? We touch this support line. This support of this trend line right here, depending on how we draw it, like we could draw it like this, right? I'm going from wicks to wicks. If we come down and test this, this is that same daily level, right? If we came down and just touched it right here, this is the same exact daily support level. This is that Fibonacci zone right around the 618.5 level. And if Market Cipher cools off and we're hitting a Fibonacci, we're hitting a daily support, we're bouncing off a trend line, trading within a channel, yeah, I see a lot of confluence that we will come back up and test this resistance and possibly even break out even higher. And if we take our Fibonacci, our Fibonacci, okay? Here's the thing, guys. Speaking of Fibonacci, if we bounce off a significant Fibonacci level, we have a smooth move. Okay, we have a smooth move upwards. It's like we ate a lot of fiber, right? The prunes and all these things, right? So my Fibonacci is actually on reverse right now, so I'm going to delete that. But I want to show you guys the smooth moves that we have. We have very smooth moves. Smooth move. Oh wait, it's not. What the heck is going on? Wait, what is going on right now? Oh, my bad, guys. Flipping myself out, freaking myself out. So like if we take it from, let's see, the swing low of this move here to the top of this move here, there we go. This looks more like it. Okay, look, when we get a bounce off of a Fibonacci level, okay, and in this case, let me take it down to the real swing low right there. Okay, in this case, look at this. When we get a bounce off of a Fibonacci level, and at the same time, Market Cipher has printed a nice bottom, and then we're starting to get trigger waves, right? And we're seeing the momentum move upward. As soon as that happens, we get this trigger wave, it's a smooth move, right? This Fibonacci Market Cipher, it's like we ate a giant bowl of oatmeal mixed with prunes, mixed with shredded wheat, mixed with pure, like, kale, okay? We had all that fiber, and it just comes right out, right? It's just a very smooth move. There's no up and down, right? You don't have to push hard. It just smooth right out. So, historically, we can expect smooth moves from things like that. So, that's what I'm expecting in the future as well. I'm expecting a smooth move. And let's see what happens. Right? People are freaking out that Bitcoin's getting bearish and stuff. But really, if we just look at it from a zoomed out perspective, and when we put on our EMA, like, it's not a big deal. We've been in this channel before with a bearish EMA. Let's go to the daily, right? Let's go to the daily. Not a big deal. We've been in this channel, right, with red diddly doots on the daily before, and it hasn't caused us to go completely bearish, right? And the reason we call these diddly doots red diddly doots instead of red dots, they're red diddly don'ts, right? You're not going too long when there's a red diddly don't on the chart, right? Those are the rules. The rules. All right. Let's see, guys. Yeah, our chiron though, well, you know what happens when it's too much fiber, right? If it's too much fiber, it can actually cause the opposite of a smooth move. Yep, kale in the cereal. All right, Jesse, Dana, can we check the RSI in the daily? Let's do that. Let's check the RSI in the daily because, you know, hang on, RSI. Give it a click. Oh, gotta upgrade my trading view. Let's turn off one of these right here, two of these right here. Let's turn off three of these right here, and we will go to the RSI, Relative Strength Index. And we have been forming, as many of you know, as many YouTubers like Carl from the Moon have been pointing out, that we are forming this type of triangle in the RSI on the daily. Okay, so you know, we could, you know, it doesn't have to be perfect, right? But what could very well happen here is, you know, perhaps we come down, we test this trend line at the same time that we test this triangle. I don't know. We could break out of this upward. We could break out of this downward. But I would also like to point out the fact that yeah, never mind, guys. I'm not going to point that out because what I was thinking was there is actually not here. So it is something to keep our eyes on, guys. You know, even though I'm bullish on Bitcoin, anything could happen, right? We could go down, and if we break below, like the reality is this. If we actually come down and break below this support, then our next support is 48, and then if we break below that, our next support is 45, and if we break below that, guys, our next support is like between 40 and 38K. So these are possibilities to happen. We might have a devastating retracement during this bull run, okay? And if that happens, you know, hodlers got to hodl, and, you know, for me, if that does happen, I will look at it as an opportunity to, you know, if we break below this support here, guys, I mean, I'm going to start looking to short. Like, seriously, I'm going to start looking to short if everything's confirmed. If Market Cipher is giving us that downward momentum, right, I'm not going to short just because we break below support, right? There's a song, I ain't going to short because we below support. That's a little preview. I'm working on a mixtape with some friends. It's called Don't Be Caught with Your Shorts Down, okay? Don't be caught with your shorts down. Because it's embarrassing to be caught with your shorts down. I know I've mentioned this before, but, you know, when I was a kid in gym class in middle school, for some reason the boys, right, we all went through this phase where we thought it was funny to pull each other's pants down in the middle of gym class, right? We'd be playing basketball. Someone would go and try and, like, dunk. And while they're jumping up, someone would yank their pants down, right? The most embarrassing, humiliating thing. And sometimes, rare, okay? But sometimes a kid would be wearing, you know, loose, baggy boxers with his gym shorts, okay? Not the boxer briefs, but loose, baggy boxers. And when someone would pull those shorts down, they would pull down their pants and their boxers, okay? In front of everybody, right? In front of the gym teacher, in front of all the girls, in front of all the guys. And what do you do in that situation? You're caught with your shorts down around your ankles. Everybody can see everything you got, right? You went from being the man, you were about to dunk a basketball, show off, to being the lowest of the low. Now everyone's looking and laughing, pointing out different things, different parts of your anatomy, okay? I'm not going to short just because we break below support. I'm going to short because Market Cipher is giving me confirmation. Confirmation. Right? Guys, I appreciate everybody who has been here. Chris Oldham wants me to look at this pair, and I will because you sent me a super chat. But I honestly don't know anything about this pair. I don't. So I'm going to check it out and see what I can see. But I don't see much here. Maybe I put it in wrong here. Let's see. Here we go. Well, I don't know anything about this pair, so I don't know its history. I don't know anything, but if I'm just going to look at it right now, without knowing anything about it, I can see that we are starting to come down below this zero line. And, perhaps we do know that while Bitcoin has been consolidating, a lot of altcoins have been pumping. So if I don't know anything about this coin pair, so I cannot really give any true analysis on this, guys. But I'm just going to mark out some levels of support and resistance that I see. It looks like that we are bouncing off like a support right here. Let me see if I pull out the fib, take it from the swing low. I guess you consider this the swing low to the swing high. I mean, it looks like we got a nice perfect bounce off the 0.5, and obviously if we start to see momentum moving like this, and we're coming up and then printing tighter trigger waves like this, and we confirm above this EMA and it turns white, then I think it looks kind of good. I mean, right now we're bouncing off a support. It was resistance here. It was resistance here, it was support here, and now we're getting a really nice bounce off of support and a fib level. If this thing prints a green wave here on the 4 hour, then perhaps, I can't really say, guys, because I have not analyzed this coin enough. But I will say that, right now I'm looking at Market Cipher as if I'm looking at Bitcoin USD on the 4 hour time frame. It's very important if you guys are trading altcoins that you find the time frames that work best for that coin pair. The 4 hour is not going to work best for every coin pair, all right? You got to find what works for your coin pair, and the way you're going to do that is by back testing. You're going to go back in history, and you're going to look at what Market Cipher is doing on different time frames. You're going to try and find confluence between different time frames and see what happens. Man, look at all these wicks. Man, Wick City up in here. Wick City. These are all buildings with large antennas on the top. So thank you for the super chat. Awesome. Alright, guys, I gotta head out. But before I head out, remember my like button is going parabolic. The Jason Casper like button spikes to new all-time highs. FOMO into the like button, y'all. And subscribe to the channel if you're not. And I appreciate all of you being here. May the Lord bless all of you and keep you. Yevarechecha Adonai v'yishmerecha b'shem Yeshua HaMashiach Elohei Israel. May the Lord bless you and keep you in the name of Jesus, the Messiah, the God of Israel. And I hope that all of you have a wonderful day and or night. And yeah, thank you so much for being here. Thank you so much.